Hey guys, so welcome back to Smart Trader. This is Das Paul, and thank you so much for your likes, comment, share, and subscribe to my channel. And if you're a new viewer, then go to my channel, watch all the videos, and only if you're liking, then hit that subscribe button so that you can watch my upcoming videos and also you can be a part of Smart Trader family. So from today, we are going to start a new episode along with the trade talk. So we are going to have smart tutorials. So in these tutorials, I will show you practical type of things in my screen recording showing you how to buy, how to sell, how to put orders, how to buy IPO, mutual fund, and different type of indicators, the reason behind these indicators, how they work. These are in this type of, these type of teachings are done in this tutorial videos. So this is a new episode. So if you like this episode till the end, then hit that like button so that I will get to know I should do more of such videos for you guys. So without wasting time, let's start off with our first tutorial, RSI. So the RSI, so it's nothing but relative strength index. So you would have heard about this indicator in a lot of videos on YouTube and many people saying this indicator RSI. So this is the most used indicator, and this is indicator as a momentum indicator. Okay, so I would like to give an example of momentum indicator. So considering a swing, so most of you guys would have played in your childhood days, or even now you guys will be using a swing, right? So considering the swing will go, this side is back and this is front. The swing goes back and front, back and front. So in this example which I'm telling you, when the swing goes back, you know that the swing will come front, right? And when you know the swing will go front, the swing will come back. So considering the same concept, the RSI also goes up and down, up and down. Understanding the concept, when it can go up, next it's gonna come down, and when it's gonna come down, it's gonna go up. I have drawn a small example for you guys to show how this goes up and down. I'm not good at drawing, but still I could manage all this for you guys. So just like the swing I mentioned you, front and back, just an example, same way let's consider this RSI, a very simple part guys. So this is the price which is moving, okay? So it goes up and down as I told you. Now this RSI moves between a range of 100 to 0, okay? This is the range of this RSI, it moves between 100 to 0. These two lines I have considered either 70 or 80 upper line, and the lower line is going to be 20 or 30. Most of the traders use 70 or most of the traders use 80. It's up to them based on their trading style, and same way 20 or 30. Now, when lot of people buy this particular stock, okay, the stock is going up and up, automatically this goes up, and once it crosses this particular line, this zone, it's called overbought zone, okay? So when it crosses this overbought zone, it's a caution, okay, the stock is already overbought, now it's not the right time to buy this particular stock, I should wait. Or other traders will think it's overbought, time for a reversal, and now I can sell a stock. So before I tell you about this, let me tell you, in indicators we have two type of indicators. One is lagging and one is leading. So lagging is something, once the price moves, later you get the signal. But in leading type of indicators, you get well in advance, just before the price action. So predicting the future. So this RSI is a leading, so it's like more of predicting. So when this price goes up to this level, it's an indicator to the traders saying that now it is overbought, now any time this particular stock can come down. So most of the traders sell their, start selling over here, and most of the traders take the positions by selling here and they buy it here, okay? Same way, when you are holding a stock, it is your decision making for a long term, a short term or long term when you're buying. Should I buy here? No, I should wait. If you need to buy, then you need to wait in such areas. So here is a clear buy for me, considering there are a lot of sellers. I know the fact that just like the swing, once it goes back it has to go front, same way once it goes down it has to go up. 90% conditions, yes, there are certain situations, for example Eicher Motor stocks, which the stock kept on going top. So I'm just saying an example. 90% of the time it goes up and down, up and down. These are the areas, overbought areas, these are oversold areas. So whenever it's more of selling is done, it's time to buy, and once it recovers from this line it will move either like this or either like this, or it may take some time, again dip, and it may go up. So there are a lot of situations, it totally depends upon the market, right? So let me show an example live on the charts of Zerodha. Example any stock, example Hindalco itself, I have taken 1 day chart. For example, considering long term investment, I just took this chart of 1 day, and now I'm just showing you how to apply or just how to find this type RSI. You get indicator of RSI, click on RSI. Okay, so this period is number of days you're considering. Your chart you're taking number of days, so if you say 14, it will take a period of 14. Okay, if you take hour, it will take a period of hours, 14 hours, all the 14 hours. Same way here I told you can take 80, 20, considering now I'll take 70. The most time I use only 70 and 30. So let me give this like this. Okay, so this one example is for you guys. Okay, so this indicator works beautifully, as I told you in my chart, right? Let me go to the chart. Overbought, and from here I have to sell, and here oversold, and after that it goes up, so I need to buy. Over here overbought, too many people has bought the stock. See, too many people have bought the stock. Later slowly the stock, and this was around which month? This is October month. Okay, in October month a lot of people bought the stock, and for example you are taking a position here. What's the price? 274, considering this RSI. You waited, it's touching the danger line, because here it is oversold, and anytime it can go up, right? So here you're closing a position. So from here 275 rupees you made around 235, so around 40 rupees, 40 rupees profit, 20% profit you made within almost one month or 1.5 months. You made 20% profit. This is how short-term trading most of them can do, this swing type of trading or short-term type of trading. And same way, when traders see that it touches this line over here, small dark shade, most of the traders would have bought. I would not say you would have bought correctly here. I would say let me take a position here itself around 230 rupees, and I will wait till it go and touch the above line. So I waited, it went and touched the above line here or here, danger zone. Okay, now I need to sell. So I bought around 236, and here itself I got afraid and I sold. So this, what is this candle over here? It was 278. So from 230 and 270, again a 40, around a 40 rupees profit, 20% profit, again a 20% profit you made over here. So this is how you can do. So over here again I sold the stock, it went till here. I got afraid and I exited because it touched the line over here. So from here 280 up to 220, 230, so around 40 rupees, 50, 60 rupees I made profit. So this is the beauty of this particular indicator, right? So this is how most of the traders use this particular indicator, mostly in short term and long term. In intraday it's very much riskier. You need to use it along with other indicators to give a good signals, or else you'll have a false signal. So now most of you guys would have a question, why does this is showing here 56? How does this price go up and down, up and down? Most of you guys would have seen people putting this indicator and doing trading. So what is the exact calculation? Why did they even create this RSI? What is it behind it? So I will teach you the formula used in this. So the formula is very simple. I know max is a subject. Most of 90% of the people feel max is a boring subject. Even I feel that, but to make money, max is also interesting. So we need to learn the formula, no other options. So this is a very simple formula. I will explain you in a simpler term. So RSI is what indicator. So my only question is, how does this price go up and down, and how is this price calculated? Why does this indicator shows this price going up and down? The reason behind this. To get a better clarity, this is the formula: 100 minus 100 divided by 1 plus RS. Here 100 remains the same, 100, 1 remains the same. Only this RS is going to change. So what exactly is this RS? The formula for this RS is nothing but, I would say in a simpler term, it is average up closing and average down closing. So if you still have confusion what exactly this RS is, let me break it down with more calculations. So RS calculation with an example. Okay, this is number of days: 1 day, 2 day, 3 day, 4 day. I just took an example of small time period, 1 to 4 days. Okay, this is yesterday's close market. For example, ABC stock closed at the price of 1000. So this is the 1000 price. Okay, so 1000 was the price, and today the stock opened and traded, and end of the day it closed at 1020. Market time is done, market cutoff is done. 1020 was the close price. So the stock closed above the previous close, so 20 above, so closing up. Here 1020 was the previous day, and finally today it closed at 1040, again 20 up. Same way 1040, and it went down and it closed at 1030, 10 down, so closing down. Same way from 1030 it closed to 1020, closing down 10. So now I have to take an average of this closing up and average of this closing down. So 20, 20, 40, 10, 10, 20. So overall period, I should always take the overall range period. In overall 4 periods, my overall value of closing up was 40. So 40 divided by 4. Same way for 4 periods, my overall value was 20. So 20 divided by 4. So you're getting an 10 and 5. So let me put this in our formula RS, closing up and closing down. So 10 divided by 5 is nothing but 2. So your RSI or RS over here is 2. So put this value of RS in this formula. Okay, so if you're putting 2 here, 1 plus 2 is 3. So your value here is 3. So 100 divided by 3 is 33.33333. If you have any doubt, just put in your calculator and type it, you'll get the answer. So 100 divided by 3 is 33.33, right? Now 100 minus 33.33, how much do you get? 66.666. that is your RSI value. So now hope you guys understand why this RSI goes up and down, up and down. This is the formula created by one of the successful traders in those time, and now we are using this automated system. We do not understand the calculation behind it. Hopefully now you guys understood the calculation of this RSI, and now you know why this RSI goes up and down and up and down. So this is the basic calculations. So this was one example which I wanted to give you guys. So by understanding the exact depth of why this RSI goes up and down, you guys also can understand and tweak these type of formulas and create your own formulas. Maybe tomorrow you can also create your own indicators. Hope this RSI tutorial video helped you guys, and if you guys want more of such tutorial videos, then hit that like button so that I will know I should do more of such videos for you guys. So please don't forget to hit that subscribe button and also share this video with all your friends. Thank you so much for your time. See you soon in my next video. Bye bye.